This is a surprise to me. It shows that there's certain stress on this market.
What's driving gold's price, the most fundamental reason is really the weaker dollar prospect.
I think it shall continue to rise at least within this year because economic uncertainty and geopolitical tensions will not really disappear or even decelerate.
The Chat Lounge. Chat Lounge.
Chat Lounge.
The Chat Lounge unpacks views and opinions on hot issues in a more casual way.
Welcome to the Chat Lounge. I'm Tiyun. Gold prices are soaring, hitting new highs more than 10 times this year. How unusual is this? What's been driving this surge? Joining our discussion on the issue are Dr. Hans-Peter Burghof, a professor and the chair of the Banking and Finance Department at the University of Hohenheim. Dr. Liu Baocheng, the director of the Center for International Business Ethics, University of International Business and Economics, and Dr. Gong, a professor of economics at the University of International Business and Economics as well. We have two guests from the same school this time, and it's like a University of Hohenheim versus University of International Business and Economics. But we didn't do it deliberately, Professor Burghof. But we'll see if they have different views. Thank you all for coming back to the chat, gentlemen. Welcome. First, a mini poll to all of you. Have you invested in gold? If yes, what's your profit margin? Sounds a bit personal, but if not, do you regret? Shall we start with Hans-Peter?
Well, I'm not invested in gold. Unluckily, I'm a poor professor, and gold is something for rich people. And I've got a son who needs a lot of money for studying and things like that. So I'm not very well invested. I give a lot of good investment advice. Unluckily, my investments are not as clever. So I might have some regret here. I might have some regret in other markets. But as I said, without a lot of money, you spend your life on your job and don't think too much about investments.
All right. I think you've just been too modest. But to Baocheng, what about you?
We share the same value.
All right.
I never touched upon the gold speculation. I never bought a stock. I never bought a lottery. And hence, we are equally poor with Dr. Hans.
Well, but still happy with a beautiful job. So don't complain.
Yeah. So.
It
but
depends.
I call the blessings to the to those who are winners.
It depends. Whom are you comparing with, right? When it comes to poor professors.
That's very true.
Right.
Sorry for the ones who think now he's arrogant because he says he's poor compared to many other people who are living on a good quality. That's for sure.
Yeah. And John?
No.
Good.
I've never done that. It's just I've never, really thought about putting some investment in gold, I guess, especially just by gold. What is that? Gold bullion? I mean, usually, you might be interested in, buying some mutual funds that have some investment focus on gold, I guess, or precious metal. But, I've never done that.
All right. Back to the soaring gold prices. Gold is seen by most people as a safe haven asset. I'm not sure. Probably Professor Burghof doesn't totally agree. But can you help us understand, as a professor of finance, under what circumstances a country's central bank or other financial institutions would purchase gold in large amounts?
Well, let me say, I understand the safe haven argument very, very well.
Right.
And it's totally true. I mean, under normal circumstances, gold is a bad investment. There's no interest on it, and it's very volatile. So you could say, why should I do this? Gold survives in its value structural breaks. And that's a crucial point here. It's accepted as value in very, very different circumstances. Under all circumstances. And so if you're rich enough to really control the gold you own, then it's a good investment to get across all these very big structural breaks in a society, breakdown of dollar, war, if you're a refugee, you better carry some gold with you because it will be accepted somewhere else as well. Whereas the currency of the country you come from usually loses its value under such dire circumstances. So I think gold is really a safe haven, but you need a certain strength, power to save it, to protect it, and get it to where you need it. And that's why for small people, gold is not so relevant, unluckily. But it's also a bit cultural story. There are some countries where even not so rich people use gold in this respect because they live in dangerous environment, a very volatile society, and so they own much more gold than, for example, the normal German and I presume also the normal Chinese citizen.
Right. Baocheng, do you have anything to add here? Or maybe
yes. To store value, China has its own conventional wisdom. During turbulent years, you buy gold.
Right.
And during prosperous years, you buy antiques. So
right.
You notice the rise of the gold price that really indicates it's a turbulent era we are facing. So the turbulence comes from several factors. One is the geopolitical tensions that is still going on in many parts of the region. And they, at least partly due to the geopolitical risks going there is more of the sanctions and also the convertibility of the currencies becomes the problem, particularly when the SWIFT system is also being monetized and even weaponized to address some of the geopolitical issues. And there are also inflation factors because, yes, the gold does not bring interest, but when inflation comes down, and people tend to make it safe. And third is that to store gold is not really subject to any monetary volatility within a certain regime because it's a gold standard that can be valued anywhere and anytime. It seems at the moment the supply side is also dwindling because some of the gold mines are rapidly declining in their production and also in the cost level of extraction. But more of the contributor for such a price hike is the readings by those institutional investors. Normal times, the jewelry consumes more than 50% of the gold, whereas the manufacturer, particularly in the semiconductor area, consumes like between 7 to 10%. But then the central bankers, they are also engaged in the gold hoarding because of also one is to iron out some of the inflationary factors. The other is to diversify their foreign exchange reserve so that they feel better off in implementing their microeconomic policies. So these are really the major issues that purports such type of rise or hike in the gold.
Thanks to Hans-Peter and Baocheng's explanation on how gold functions as a haven. And then to John, we mentioned earlier that 11 record highs in 2 months. Do you see this unusual, or what kind of signals do you read from that?
Well, I think the fundamental factor, most important factor driving the gold price going up is the market perception or market prospect for a weaker dollar. I think this is the most important thing.
Okay.
There's some expectation that dollar is going to be weak, interest rate might come down. Donald Trump wants it to come down. Donald Trump explicitly said that he wants the dollar to be weak. So I think there's the market consensus that the dollar is going to trending down. And as a result, of course, what are the alternatives? A lot of money is actually rushing to gold.
And to Hans-Peter, well, we've learned that in England, the minimum waiting time to load gold out of the Bank of England, which stores gold for central banks actually went up from a few days or a week to 4 weeks. And that's about a month ago. Now, I guess the waiting time could be even longer. So how incredible does that seem to you from your perspective? You know, you're close to gold bank, I should say.
Well, it's surprising to me because, I mean, you should provide gold if you want to play this role, and you should provide it very fast because, I mean, that's why people store values with you to make them available when you need them. So this is a surprise to me. It shows that there's certain stress on this market. But I'd like also to say this price rise is also very much due, I think, to international tensions, to threat of war, to the fact that some nations prepare themselves to have reserves of gold in case of an attack, and in case of economic turmoil due to the growing tensions. And so I think it's a bad sign in a way. It's not only that the dollar gets weak and things like that, it's more behind it. And also a country like the US might also like to buy some dollar just to make it more difficult for the other countries to create such reserves which helps them in bad crisis situations. So it just gets more costly with a higher dollar price. So I think there are some strategic reasons in the central banks, which might diverse depending on which country you're talking about, why they buy dollar at the moment.
Now we see some differences.
Let me complement that. And I totally agree that a lot of the purchase is actually indeed driven by the central banks behind all of this price run up for the gold. Other than the geopolitical turmoil, uncertainties, I think there's also a very important reason that I think quite a number of countries don't view their foreign exchange reserves invested in dollar-denominated assets as being safe. I mean, you look at the example, for example, the example of Russia's almost $300 billion of assets essentially being frozen, being impounded, not confiscated, and legally it's impounded by the European side, and they view that, well, I mean, this is seriously cutting into the trust into the sovereignly held dollar-denominated assets, putting in foreign exchange reserves, mostly in dollar, I guess, and also the euros as well. And I think it's very clear to me. For example, China is actually buying a lot of this kind of a gold, moving foreign exchange reserves in dollar-denominated assets like usually treasury bills and bonds, and moving some of the foreign exchange reserves into gold. I mean, you look at the very simple example. You look at the trade between China and Switzerland. Switzerland is actually probably the only country that makes this kind of a gold bullion, right? That's stored in the basements of central banks. You look at the trade between China and Switzerland. I think China maintains very large trade surpluses with practically every European country other than Switzerland. And you have to wonder what China's buying from Switzerland with such a large imports from Switzerland. And I'm pretty sure, I'm betting that a lot of it's actually gold. I mean, these are physical gold bullion being transferred from Switzerland to China. Switzerland has the technology to process very pure gold bullion, and it's probably the only country that does that. So China is buying a lot of it, in my view. That's my conjecture, and putting the gold in the basements of some buildings in Beijing, on outskirts of Beijing, and that's very safe foreign exchange reserve.
The Chat Lounge. The Chat Lounge unpacks views and opinions on hot issues in a more casual way.
I think you actually got the same, direction, right? That shows how the world, including China, is worried about the global economic situation right now, right? Maybe Baocheng, do you want to back up your colleague here, or do you stand, with Hans-Peter?
Yes, sanction is really one important factor, particularly to drive Russia to store more of the gold.
Right.
And China has been, in recent years, aggressive buyers, and India also, in order to fill their central vault. and to diversify their reliance on the US dollar or euro. Another one is inflation factor. If you look at Russia, their savings rate is 21% officially, but still people wanted to buy more of the gold since the people read the prospect of further inflation is at the doorstep. So, and then China also produced a lot more liquidity. So therefore, the middle class are also interested in doing that. But the biggest players are those institutional investors. They see it's a big opportunity to speculate between the money market versus the gold, and also dealing with other type of investment like cryptocurrency to back it, the value up. So all these factors are really combined to support the rise. Plus that there's also rising middle class, particularly within China, India, etc., with those big emerging economies, and of course conventionally the Gulf countries. The consumption of jewelry is also an important factor that drives the price up.
Right, and according to
let me say one thing about that.
All right.
I don't think that Russia plays a big role actually on the market, because under the conditions of war they have now, I don't think that they're able anymore to accumulate so much gold reserves. So I think it's more the countries in the run-up to a conflict who are able to build up gold reserves at the moment. So I'm not sure. Russia doesn't play such a big role in that, but China definitely plays a very, very big role in that, I'm sure.
It's interesting that you all mentioned factors or reasons like, geopolitical tensions, or like the conflict between Russia and Ukraine and things like that. But there is another reason, I think mentioned a lot by other institutions or media outlets, says that the tariff plan by U.S. President Donald Trump. I'm not sure how has that contributed, or to what extent has it contributed to this round of, soaring prices of gold? Hans-Peter, please.
Well, let me say, for sure this contributes to uncertainty, and uncertainty leads to people running for gold at that moment.
Right.
But I don't see any direct effect on that. I don't think that this is a very crucial point. It might lead also to some countries saying, I want to have my gold back home. That's a big debate in Germany for some parties. They say, we want to have the gold not in the US, not in New York. We want to see the gold right here at home, because this is no longer a trusted partner. And this shows how far these tensions go. Most politicians in Germany would say, we can still trust the US in this respect, but some say we must be careful. This is a very strange government, which is in its whole behavior cannot be predicted in what we get out of it.
Right, but when it comes to the tensions between Russia and Ukraine, it seems it's easing, at least right now, right? It shouldn't be seen as a big contributor to the rising prices. So maybe Baocheng, you already mentioned other reasons like the global demand, or higher central bank purchases, or rising jewelry demand. But what's contributed most to this year's surge then?
Let me give you some figures.
All right.
In recent 1 year, central banks and the sovereign governments contribute to roughly 30% of the purchase power. Then the institutional investors and those hedge funds, they contribute to up to 40% of the entire pie of the gold market. And some of the retail investors, like those who deal with gold bars, those coins, and also those ETF hedging funds, etc., they address like 12%. The jewelry sector actually is getting lower. Actually, it's they only have roughly 20% of the share. It used to play a bigger role. They consume more than 50% of the gold market. And also there is a slight rise in the industrial use for the semiconductors and for some of the sensitive equipments. They also use more of the gold. So it is pretty much pushed by the demand side. So where the supply side is also see some dwindling because of the cost of extraction or mining industry is getting higher. Yes, with regard to tariff is not, I totally agree with Hans-Peter, is that it is not really a direct reason, although, tariff add to the cost and disrupt the global supply chain, has contributes to inflationary factors, but it is the more of the speculative forces and also those central governments or central bankers who wanted to be to build a buffer zone against the further fluctuation of the major currencies like US dollar and euro.
Then may I say something about what you said before about Ukrainian war? I'm not sure if you're able to say, put this on wire, but the point is, it's not tension. There's an aggression of a nuclear power, the largest country by population in Europe, against the 8th largest nation in Europe. And for sure, this shows what is now possible. So somehow this war represents this new era of aggression, of tension, of using of force to get through with political games against, should I say, any common sense which would lead to common welfare in this world. So in a way, this is, how should I say, it's a benchmark war we have, which showed us what's possible. And for sure, if you look at the gold price, for sure, this is a big driver of the gold price as well as representative of this kind of non-cooperative behavior we're seeing now in the world, and that's something we should not forget about this war.
Yeah, but there's a big amount or larger proportion of those of the gold, stored in the Bank of England is going or is flowing.
Sure, but as I said, the world price is a world price, and the world price depends on expectations. And if you look at this, what is possible? Why shouldn't other countries just start to attack their neighbors the same way? There are many conflicts, many tensions like that. And if this happens, for sure, there will be high demand for gold to get through these kind of structural break times.
But it's a large proportion is going or flowing into, the United States. The gold depositories at the U.S. Commodity Exchange have doubled in 3 months. Is that a regular practice, or, other central banks also do that too? Or
well, as I said, they grab for gold, and ones maybe want to have the gold because they feel threatened, and others grab for gold because they expect a rising price and because they want to make it for the other powers more difficult to have this safety, safe haven, to achieve this safe haven. Because, if gold is so expensive, it gets harder for other weaker countries to buy so much gold.
But why is
I also give you one fresh experience advice on the Chinese company who is selling some of the agricultural, the harvesters together with fertilizers, etc. to North Korea. And now the total settlement is in gold bars. So they are also under the sanction, not only by the United States, also by the United Nations. And that's one way that they work out their international trade. And actually for Russia, as I understand, the war is not really easing. Probably there's going to be another climax. So the people are feeling panic. So therefore, some of the middle class through the black market, they are also struggling to get more of the conversion from the ruble into gold. So these are really the actual reality that people can read into. So after all, gold for centuries has been the safest one, that is there to store their value.
This has been the Chat Lounge. When we come back, check out how the rapidly rising gold prices will affect industries and the global economy. Stay with us.
Sideline Story brings you all things sports related. The hottest topics, latest events, juiciest stories, all with a very personal take. Subscribe to Sideline Story Podcast for heated sports discussions covering events that are happening in China and around the world.
Welcome back to the Chat Lounge. We continue our discussion on soaring gold prices. Baocheng, are you saying that U.S. financial institutions or U.S. investors are more concerned than their counterparts in other parts of the world? Because gold prices in New York are actually, there's a gap between the prices in New York and at least in London, right? And it's higher.
You have different categories, investors. Those investors in the real economy, like building manufacturing facilities, etc., they're not really highly interested. But those hedge funds, they are so much excited because this is a golden opportunity. They fish out of the troubled water and they stir such sort of turbulence. So they are different players.
All right. John, you have anything to say there?
Well, I think we're entering into an age of higher tariff, which means that world trade, global trade is going to be curtailed back. And what I'm thinking about is probably it's going to affect the balance of payments situation in a few countries that have very large foreign debt, and they might be having difficulties. And in this kind of environment, I guess there will be companies, institutions looking for gold as a way of preparing for a bad balance payment situation. That might be also increasing the demand for gold. I mean, that could be the case. But, I totally agree that it's a secondary, indirect effect.
All right.
But what I think what's driving gold's price, the most fundamental reason is really the weaker dollar prospect.
All right. And there's another factor. I'm not quite sure if it's... people talked a lot about it recently, is it might have something to do with Elon Musk's plan to inspect the gold reserves at the U.S. Bullion Depository at Fort Knox. So maybe, Baocheng, you're a professor of business ethics. What's your assessment there?
Well, in recent months, Elon Musk is talking to the moon. So I do not think this can really be taken very seriously. And the vote in Pennsylvania is something that is not really totally controlled by the U.S. government. And he's just bluffing. I do not think any serious, even speculator, not to mention investors, really consider it as a major factor for them to make different investment decisions.
All right. And Hans-Peter, do you share similar opinion?
Well, if this was not the real world, it would be funny. I mean, listen, this Fort Knox, I'm sure gold is counted every day in these kind of depositories. And so that something is missing in the sense that it's really missing, I cannot really imagine. So it somehow contributes to some paranoia. It must be contributed to some paranoia to fear that this gold is no longer there. It might be a complex system to find out which gold is where sometimes, but I don't think there's really something missing. So I think this has no real impact on the price of gold at the moment. It just gives us additional uncertainty about what to do with this new American government. That's what we all want to learn. But somehow, sometimes in bargaining, and they try to be a big deal makers, yeah. And sometimes bargaining, you just create a lot of noise and just to hide behind this noise, to hide what you really want, and go to extreme positions, make strange things, and then it might, what the outcome might be in the end more rational than expected. I don't know if this will happen, but wait and see.
John, do you have a different opinion there?
No, I totally concur. I mean, this is
Right.
I'm not even sure this is a real story. I mean, it could be a conspiracy theory. I don't know. But, we know that the gold price has been on the rise way before this story broke out. It's already been, into this upward trend for some time already. I think it's a minor event. Even if it's true, it's negligible in my view.
All right. But some people are also asking whether the U.S. is hoarding gold for risk aversion or to fight for gold pricing power or to control the global market. How valid is that?
Essentially, I forgot to mention one thing. If you tune into the conservative radio stations in the United States, there are actually a lot of ads peddling investment opportunities in gold.
Right.
For example, Donald Trump's son, Donald Trump Jr., he personally appeals to his constituents, about investing in gold. Sean Hannity show, God knows how many ads on that show. I mean, I remember I drove from Washington D.C. down to Florida. And interesting, I'm never enamored with the GOP politics, but I love their radio shows. People like Sean Hannity. It used to be Rush Limbaugh, for example. He passed away already. I mean, I love to listen to their shows. And in all these shows, there are a lot of ads actually by those people pushing investment vehicles, instruments in the gold market. I'm guessing that might be the reason. It's just demand. Rising. These are speculative demand, not people, demand for things related to gold, for practical life, buying jewelries, for example. These are for investment, right? And just more money pouring into the buyer side. That might be the reason.
You're saying that a few, DJs or radio hosts driving up the gold prices there?
Well, I mean, these are very influential shows. I mean, come on. I mean, Sean Hannity show. I mean, they have hundreds of millions of followers, right? I mean, it's I think investment in gold is portrayed as part of the MAGA philosophy. It's common sense. It's touchable. It's tangible. It's for real, right? I mean, I wouldn't take it lightly. I think there is got to be creating a lot of demand for investing in gold on the American conservative side. That might be one of the reasons.
All right.
I'll say two things about that as an economist. Two things. The first one is, this might have a large speculative component, which means if we drive up the gold price, we get richer. And this holds for the private investors, but it might hold for the same as the whole United States as the largest gold holder in the world.
Yeah.
So this might be one aspect. The other one is a real power economics issue.
Right.
Having the gold in the US makes the United States stronger. It gives them additional power. And if you motivate people to buy gold, the gold is, it's not owned by the American state, but at least it's in the US. As I said, it makes it for other countries more expensive to build gold reserves and gives you more, how should I say, purchasing power in a world of crisis, of distress. And this might be reasons why the United States is playing this game as well, although the United States itself don't feel themselves threatened by this geopolitical turmoil because there is no perspective that anybody would like to directly attack the United States. I mean, we're pretty far from this point, at least of conventional war terms.
Right. Baocheng, your take here?
Yeah. So if you read certain events, then who is going to benefit? So that's something that determines the intention and who is more capable. So the beneficiary could be first the conventional mining companies because higher price can really make their mining operations more profitable.
No.
And those
sorry, Baocheng.
speculators who hold the money.
But we'll talk about the beneficiaries a bit later. But the purpose or what Hans-Peter just said, is there any specific purpose of U.S. it's already the biggest, gold holder in the world, but it's still taking in gold from around the world. Is that, it wants to strengthen its position as a gold pricing power.
Yeah, I would like to hold my horse to race into conspiracy theory because
that's not a conspiracy.
Gold market is highly international, and people are all familiar with that. So it is really the general reading of all investors, be it individual households to institutional investors, into what is going on and what is lying ahead in the immediate future with regard to the macroeconomic policy, international trade, and also the weakening of major currencies. So that really prompts such a sort of price hike. Of course, all speculators can contribute to such a sort of a turbulent event.
All right, then. Move on to the impact of that. Baocheng, you just mentioned who could benefit from the surging prices. Then would you elaborate a bit more? Gold mining companies and
mining companies like Jincor, the globally largest space company. They both are extracting gold, and also they hold a lot of gold, and they also are hedging on the stock market, etc. So, these companies are going to benefit because they can earn more profit out of it. And those who already hold gold, be it central government, be it individuals, they already are reaping their result if they sell at the moment. So, because you never know what is going to happen in the future. So the central banks, they also benefit not only from the price increase, but also they are able to diversify their foreign reserve portfolio. So these are really the strategic considerations. And those who are able to have the gold, then they will be able to meander through some of the sanctions and also the SWIFT system monetization over their transaction and also over their settlement. So these are really the one that's there to benefit.
Then,
but of course, those who suffer will be those users, definitely, because, for example, for the manufacturer side, dealing with medical equipment, dealing with semiconductors, dealing with precision type of equipment, they have to pay higher cost for using that. And that's also why the jewelry business is also seeing quite a decline at the moment.
The Chat Lounge. The Chat Lounge unpacks views and opinions on hot issues in a more casual way.
As we mentioned, the central banks worldwide have increased their gold reserves to adjust their foreign exchange reserve structure and probably reduce dependence on the U.S. dollar. So, Hans-Peter, will this soaring prices facilitate, the restructuring of the international monetary system?
I'm not sure if it really plays this role because there is limited amount of gold available in the end. Okay. And we must be aware of that. We had these countries after the First World War who wanted to go back to gold standard, and the result was a very severe recession because we need more flexible monetary policy than the gold standard would allow for. So I wouldn't expect too much from that. In the end, gold is a safe haven for very extreme circumstances, and apart from that, it has no interest rate. It's not really productive. It's even not as useful as other commodities we're talking about. It's all this, we should say, this mystical character of gold. If you touch gold, you see something special. It feels like special. But like many other aspects of money, it has some, how should I say, some irreal component in it. So I wouldn't expect too much from that at the moment. And let me say something about the winners, maybe. As often in life, it's not certain who will laugh at the end. And now that some of the winners, my esteemed colleague just mentioned, won't be the winner in the end, because I hope that that the nations come back to a more cooperative stance, and then some of this pressure that drives the gold price up will begin. And then everybody who bought gold had made a nice speculation, but lost money if he was not able to buy in time. So that's an open question. Who will win in the end on this special spike of the gold price, as it might come down as fast as it went up if the reasons, some of the reasons to buy gold are no longer existent. And maybe also the expectations that gold somehow will replace the dollar. As I already explained, this is something I don't expect that this can be done. So we must find some other solution in the end. And if this expectations goes away, then we might have also a totally different gold price again very soon.
True, but
paradoxically,
John,
we three of us are already winners because we are free from all those anxieties.
That's true.
Maintain a regular heartbeat.
Free from any, concerns or any mind-boggling thoughts. But John,
don't forget, gambling is also fun sometimes. So these people who speculate have also fun in gambling with money,
Until your fingers get totally burnt.
That's right.
Just some spice in life. But John, you're saying that it's because of a weak dollar, and at least it seems some countries or central banks, they are attempting or trying to avoid. We're trying to, depend less on the U.S. dollar, right? What's your take there?
Well, I mean, this is a general trend that the new president in the United States, Donald Trump, is very worried about. I mean, he's saying that those countries that try to shun away from use of the dollar, he's going to apply tariff, right? So, there's a initiative going on right now within the BRICS to essentially come up with a synthetic currency, sort of hybrid currency that serves the function of trade settlement currency among BRICS member states. And Washington is not very happy about this. So I think, overall, you're absolutely right that the importance of the dollar in the international economic system is being diminished a little bit. I will only say just a little bit. It's a long way from the kind of a doomsday scenario for the U.S. dollar. It's just way, way far away. So I think at present time, gold is still very attractive to many central bank officials.
Could it be, the beginning of the restructuring of the international monetary system, which I know Hans-Peter would not, support that much?
I don't think so. I don't think we're going back to the gold age. It's not going to be like this. The entire gold supply in the world is still very much controlled, and it would not be enough gold to go around for sovereign reserves, and that's just not going to happen in my view.
Okay, then the ultimate question: how long will the rising momentum last?
I have a strong opinion on this question. I mean, you look at the historic price of the gold. You take a very long-term perspective. It has always been of the pattern that it goes up and then it gets into a sideways trading range, going back and forth, and then for the next cycle. Right now, I'm not a real professional in trading gold, but just by looking at this chart, by looking at the pattern, I think we're starting to probably get into the stage of sideways trading, which means that gold price is probably going to be fluctuating between $2,600 to $3,000, somewhere in that range, going up and down for a while before it takes the next jump again. So I would imagine that we're probably in that range for a few more months.
Hans-Peter?
Well, I wish I would know so much about the future as you do. I've got some problem with that.
No, I don't know about the future. It's my speculation.
Yeah, it's speculation. I'm aware of that. And it's nice to talk about what could happen, and we must tell stories about it to have an idea what could happen. Let me say two things. First, there are political decisions which drives the gold price one or the other direction, and these political decisions are totally unpredictable. Yeah, might get a solution in Ukraine, for example, which stops this war, if it might stabilize or destabilize, even depending what kind of solution is the European conditions. And this has influence on the gold price. There might be other political decisions. Things happen on the political field which have the influence on the gold price. That's the first one, which is unpredictable for me. Secondly, I mean, such a run-up of the price has its own dynamic. So you come to a certain point where just the price is going up because the price is going up because everybody expects higher prices tomorrow. And so this speculation drives the price up again and again. And that's what we call a bubble. And here, the big problem for us as economists is we never know when the bubble will break. Yeah, we don't know when we stumble out of this, everything is growing up, equilibrium into equilibrium where everybody doubts, because this development of doubts first is going very slowly, and then it just breaks over the market. Nobody trusts the price anymore, and then it really goes down. And so all these, how should I say, destabilizing elements are there, and that's why I think the prediction of the gold price is, for me at least, not credible. We cannot really see where it goes to. At the moment, it's on the highest level ever, so there's a high downside potential, but on the other hand, there's also this expectations we have in the world, growing insecurity, growing conflict, which might drive it even higher up. But nobody knows what will happen and when will it happen.
You just mentioned it's closely related to political decisions, but can you give us some one specific example? What kind of a political decision are you talking about, and how it can affect or impact the gold prices?
Let me go to the big centers of conflict we have at the moment. One is war. If we find a solution that stabilizes Eastern Europe, the tension in Europe goes down very much, which changes the role of gold in this context. That's the first one. If you don't get into a stable situation, the gold price might run up even further. Depends really on what kind of solution we find here. Second one is, well, the conflicts between China and the United States on trade. I mean, this is far from anything like war, but it is really tension, and it has a large impact on how the big nations, the superpowers, China and the United States, deal with each other. So if we find a more cooperative solution here, for sure, this will also get away some stress from the gold market and might lead to a situation where people now expect lower gold prices, and then these lower gold prices will be realized very fast. So these are two very big global issues which might play a role. Other things, internal elements of policies, how strong is the Fed against the president? Is the Fed really willing to have such a weak dollar? All these are aspects of politics which might influence the future gold price in a way we cannot predict.
Right. Baocheng?
Well, we mentioned several factors that drives the price hike, which is economic uncertainty, geopolitical confrontations, and inflationary factors. So as long as these factors persist, the momentum for price hike shall continue. But of course, to a point where the bubble can burst, which no one really know exactly when it's going to burst. But yes, when the global order is getting more stabilized, and also global economy is getting more streamlined, then the gold rally can really lose their steam. So this is the basic theoretical structure, but I think it's applicable to the current situation.
Right. And two more very short questions to all of you. What's the gold price outlook for the rest of this year? Goldman Sachs has upped its final 2025 gold price projections from $2,890 to $3,100 per ounce. So what would be your anticipation? Each one of us give me probably a number
Yeah, well, I've already said I think it's going to trade sideways. I think it's probably going to be between $2,800 to $3,000. Maybe more for a more severe drop goes down to close to 2,600. But I think it's probably going to be in that range.
Okay, and Baocheng?
I think it shall continue to rise at least within this year because these factors, economic uncertainty and geopolitical tensions, will not really disappear or even decelerate. So therefore, there's good reason for the gold at least to sustain its rising trajectories.
Okay, and Hans-Peter, please.
Well, after saying so much about why I should never do this, I give the price of 2,500 just to be a little bit below the level of the colleagues. So if we can make a bet, we can make a real bet, because I think how should I say, political developments might speed up against the end of the year, because there are certain preparations right now which might come into effect and which might stabilize the global community. And if this happens, then the gold price will even go down.
Right. And last but not least, the implications for average people, invest in gold now? Hans-Peter?
I think the impact is not very big for average people in most countries. I mean, Indian, for example, the richer families own a lot of gold. For them, that's real fun that it's so valuable right now. But in my home country, the effect is not very big. Some richer people might be interested in that, but normal people are not very much touched by the gold price as such.
Since you yourself don't invest in gold, so you wouldn't recommend average people do this, right?
Well, if average people have fun in speculations, they should do this, but only with amounts of money they can afford to lose. But as a serious, as an investment to save your pensions and protect you in old age or something like that, I think gold should be only, even in larger portfolios, a comparatively small portion of the portfolio.
Right. And Baocheng, please?
Well, for ordinary people, first, it's going to reduce their living standard in however marginal way, because the rising cost of gold can affect all consumer goods, particularly those electronics or e-vehicles, etc. And the ordinary people may also go for a frenzy to purchase, because the trajectory of rise is still going on, but they beef up more of the risk until the bubble really burst.
Right, on that note, we wrap up this session of the chat. Many thanks to Professor Liu Baocheng, Director of the Center for International Business Ethics, University of International Business and Economics, Professor Hans-Peter Burghof, Chair of the Banking and Finance Department, University of Hohenheim, and Professor Gong, Professor of Economics, University of International Business and Economics, for sharing your time and insights with us. The show is available on all major podcast platforms. Please email us your comment at radio@cgtn.com. I'm Tiyun. Thank you for listening. Join us again for more chat at the Chat Lounge next week.
Once upon a time, in a land not so very far away, stories were told of the brave and the bold.
The whole court fell silent to hear what the great warrior Mulan might ask for.
Of mighty deities and powerful immortals.
Immediately, the shimmering skin started to grow before his eyes.
Of fated love and love sanctified.
In dawn's golden light, Niu Lang said,
"Marry me."
Of great journeys across fantastical landscapes.
So the cat and the mouse climbed on the dog's back, and the dog swam across the broad river.
In the company of friends and enemies and unimagined beasts.
Hello there. Good to see you.
Of ordinary folk with tantalizing stories to tell. Heroes and heroines all.
It's incredible. How did you do that?
Tales of sad sacrifice and victories snatched from the jaws of defeat. Stories of the wise, the accomplished, and the quick of mind. 5,000 years of amazing Chinese folk tales. You'll find Chinese Folk Tales Season 3 wherever you discover your favorite podcasts.
Dive into news like never before with Deep Dive, the podcast from CGTN Radio. Join our global reporters for captivating stories and thought-provoking conversations. Search Deep Dive on your favorite podcast platforms and get ready to dive in.